I'm Sarah Williamson, and this is Going Long with FCLT Global. On this show, you'll learn what it means to be long-term from the top minds in global business and investing. Leaders from companies and investment organizations join us to discuss how they are leading their teams for the long run on issues including capital allocation, risk management, climate change, and sustainability. To learn more, visit our website at fcltglobal.org. Our guest today is Bob Sternfels. Bob is the global managing partner of McKinsey & Company. Bob joined McKinsey in 1994 and has worked in nearly all of McKinsey's offices around the world. In addition to chairing McKinsey's board of directors, he's a member of its Institute for Black Economic Mobility and a sponsor of its Women in the Workplace research. Bob's active in a number of initiatives and recently joined FCLT Global's board of directors. Bob, welcome, and thank you for joining me today.
Oh, it's great to be here. Thanks for inviting me, Sarah.
Great. So McKinsey has played a huge role in the life of FCLT Global. We're very grateful for all the things the firm has done over many, many years. And part of that has been, of course, your focus on bringing long-term business decision-making to the forefront. So thinking about that in your own work, helping to get us started back officially 5 years ago, but the work went even further back than that. So can you tell us a little bit about why this topic has been important to you and to McKinsey for so long?
Happy to, and I think you're right. I was kind of going back. I think it's a decade in the making together, Sarah, and some of the early catalysts, if you will, were around the recovery from the last financial crisis. And one of the pieces that our previous managing partner, Don Barton, put out, I think it was around 2011, if I'm correct, that actually talked about capitalism for the long term. And you kind of fast forward a decade in terms of now what you've all done with FCLT, and it's amazing. And I think the reason that as a firm, McKinsey is so excited about this is it's a much more comprehensive definition of capitalism. And one that, as the data and research that we've jointly led in proves, is more valuable. But it also has a whole bunch of other positive externalities associated with it that I think, if we're honest, we're probably still in the early innings of discovering. And I think we're also all realizing that there are market imperfections out there that need to be solved in more creative ways. And that's incredibly exciting for all of my colleagues. And it's why we've been on the journey with you for this decade.
Yeah, that's great. And I think that thinking about, as an economist, thinking about the market imperfections and the positive externalities is a way to really bring this into sort of real business language and an understanding of why the market doesn't take care of it itself. So that one piece of work that you all really led through the McKinsey Global Institute, the Corporate Horizon Index back in 2017, was very foundational, and it looked at the outperformance of companies that took that longer view. It also showed that in the short run, in that financial crisis time, they did get hit harder, so that the CEOs are not crazy when they say that they think that the market is going to punish them in the short term, even if they outperform in the long term. And so I think that's one of the things that we've really stuck with this whole time, is it's not always easy. So how do you help your clients when they say, well, yeah, Bob, I know that's the right answer for 5 or 10 years from now, but how do I get from here to there? That's what gets hard sometimes.
Which I completely agree with you on, in terms of that notion and the problem. The couple things that are kicking around in my head as we unpack this problem. One is the notion of courageous leadership, and I do think at the heart of this begins a conversation with any executive about how do you get the courage to do what you know in your heart is the right thing for the entity that you lead, the enterprise that you lead. And that right thing is in every CEO that I have spoken with, is to create an institution that is stronger when they depart than when they came in, that sets up the foundation for the next generation, that does right by the folks that work there, and that has, back to your notion of positive externalities, Sarah, is one that radiates positive externalities, not negative externalities. Every CEO in every industry in every country that I've talked to has some version of that, of that aspiration. And so then it becomes a question of, well, how do you live into that aspiration? And I don't know if there is a silver bullet to this, but part of it comes with clarity of direction, clarity of the markers of progress against this that actually link ultimately to long-term value creation, that gives the confidence to the market around this, and clarity to multiple stakeholders. Remember, the markets are only one voice in today's world, to say, how do you actually build enough of a consensus across multi-stakeholders, to use a term that FCLT has been using already, that it gives you conviction to move. So that's a very CEO lens to it. The one other thing that I would say that I'm incredibly excited about in terms of the work that FCLT has done is the market is not an exogenous entity that cannot be impacted, right? The market is comprised of multiple participants. It's comprised of public enterprise. It's comprised of asset class investors. It's comprised of financial institutions. And I think one of the exciting plays that FCLT has is a notion of bringing multiple parties together from different parts of an economy to start to align on different sets of metrics. And that notion of punishment could evolve if institutional investors, financial institutions, et cetera, start to modify their metrics. And I think we're seeing that in front of our eyes. And that could then build confidence for a CEO to go on these longer term journeys.
Yeah, that's such an important part of this, because we think a lot about that interaction between the companies and the investors, but the investment community has lots of parts, and oftentimes those are not obvious to a CEO who's actually a shareholder versus just a sell side analyst versus somebody who might buy your shares, but you don't have a fiduciary duty to. So I think that's an important part of it. So, but coming back to the positive externalities, is that what you are thinking about? I've heard you use the term holistic impact, the holistic impact of a company. Is that kind of how you're thinking about that, or explain that a little bit further?
I think it's spot on, Sarah. And one of the things that we've been on a journey and as a partnership is to evolve our aspiration for how we help our clients change. And that aspiration, if you went back in time, was really rooted in a financial aspiration. How do we help our clients outperform financially? That then migrated to, well, okay, there's and if you go back to the work that we've done around the corporate finance space and the valuation book, which is kind of one of the famous books in the space of what drives value, et cetera. We've been big proponents of driving long-term value. So that gave way to, well, will the outsized returns sustain? How do you ensure that these are not one-time hits? What it's giving way now to is this notion of holistic, and you hit on this, holistic impact, which starts to then say, let's take a wider definition of an objective function for an enterprise. Clearly, financial returns matter. And it's the source of economic value creation, et cetera. Those need to be delivered over time. They need to be not only productivity, but growth, top line growth, and value comes from both of those. But there are other components to this. How do we actually think about the journey in workforce? And not only because that is a good thing to do, but think about the world around us that has a massive opportunity as we embed technology across all enterprise to drive new job creation. Some of the work that we did in MGI says that there'll be 750 million new jobs created through the adoption of technology that we know today. But 400 million current roles need to be reskilled. So how do you as an executive think about the implications on your workforce? Do you have massive dislocation, or do you have a massive reskilling opportunity? That's part of an objective function, which at least in my mind clearly links to long-term value creation. You then go to suppliers and customers. This notion of you're part of an integrated value chain. And I think we've seen the implications of not thinking about resiliency enough in a supply chain in the world around us today. And so how do you actually think about the implications of you as an individual enterprise impacting both suppliers and customers as part of an integrated chain? And then finally, you know, the existential question, I think on the minds of all of us, the impact on the environment and climate, and not as a negative externality, but actually as one of design for the objective function of the enterprise. And so this is, I think, maybe the next wave, Sarah, as we move into this, and I know you've been pushing this with SCLT, is how do we continue to take a broader and broader definition of the objective function? As the science of economics, you know, as you well know, if you go back, started with some simplifying assumptions and excluded things. And we all knew that by design. You go back and you look at some of the biggest evolutions in the 1930s and 1940s in economic science, there was a lot of assumptions of saying, yeah, but let's leave those out. And I think where we are now is no, let's actually find ways to model these in and drive them with them being endogenous as opposed to exogenous.
Yeah, I think that's a great way of thinking about it. And it's also, if you think about a lot of those assumptions that were left out, time is often left out, which is funny. It's almost all economics. It's a snapshot. There's this supply and this demand. And, you know, you've mentioned this in terms of how companies are progressing. A lot of this is about rate of change. You know, in the real world, you don't change a company overnight. It takes time. It takes time either to reskill those people or to develop new technologies or to enter new markets or whatever it might be. So I think that combination of, I like your way of broadening the objective function but then recognizing the time to get there.
I think you're really onto something on this rate of change versus absolute position, and how that links to more long-term thinking. And I think this could be played in multiple dimensions. We're trying to move from a device oriented company to a software enabled technology company. Well, saying that is one thing. It will take a decade to do that. I'm picking up an engineer products company that I work with. Rate of change becomes incredibly important to the multiple stakeholders, including the financial community. Well, how are you doing? How many software engineers are you building? What's the new rate of the new business versus the core business? If you're an oil major, we will be net zero on the other side. Is it about the starting position? The starting position is brown. The question becomes, how fast am I going from brown to green? Not am I brown or green today? The reality is I'm brown. Do you want to incent me on the migration? So I think there's some elements of, if we can develop a rate of change nomenclature, we might actually incent even longer term investments and bolder bets, which I think would ultimately be great for the economy as a whole.
And the good news about investors is they do typically think that way. You know, an investor thinks about not what did the company do last month or last year. It's what's my best guess of what they're going to do next month, next year, next 10 years. So I think that's a kind of a natural place to start rather than the sort of bean counting mindset, which is a little bit different. But if we think about sustainability, you've mentioned this, how do you think about the way that McKinsey is? I know you've been establishing this new sustainability platform, and I understand you've made some acquisitions of organizations that are doing interesting things in this space. So how are you thinking about reskilling yourself, if you will, or expanding your capabilities to be able to work on these sustainability issues?
It's a great question, and I would lead off with it's our top priority. We've made a commitment to over the next 5 years invest $1 billion here, and this is not something that's inconsequential for us. And it has to start at home, which is internally within our own firm. are we making the changes even before we think about how do we help our clients make changes? And so that comes with commitments like being carbon neutral since 2018, net zero commitment for 2030. For us, travel is a big thing. We have folks who fly all over. We've got a commitment that our per person travel will be reduced permanently 25% by 2025. And how do we actually kind of wire that in terms of how we work? And then 100% renewables also by 2025. And I'm not sure those are our final goals, but we need some goals that we're going to execute against, and we'll come back and say, can we be even bolder? And so that's a bit of charity starts at home, aspect to it, which I do think is important. The other part that's important is a commitment that we've made that we want to help all of our clients make a transition, all of our clients. And to that point, we were talking about a rate of change. Our clients all have different starting points. We work with some of the biggest energy companies in the world that start with a pretty brown footprint. We also work with new renewable disruptors who are green from day one. And that's wonderful, right? I think the question in the first is how fast can we transition in a way that is economic and also not regressive? One of the points here when we start to get to some of the practical discussions around this, Sarah, is, I think you may know, but let's take the US, and it goes far more if you go to an emerging market, but even in the US, 60% of low-income households spend over 10% of their total income on energy. Mm-hmm. So small changes in energy price have massive implications on can you feed your family. So there becomes a real practical element of we need to transition without making that transition regressive. Because if it's regressive, this becomes deeply unjust. And that might be an interesting problem, say, with the energy company. With the renewable company from day one, it's how do we help you eliminate any of the barriers to scale that you might have? Scaling is a tough thing, organizational issues, access to capital, access to markets, because this is such a disruptive technology that could change the lives of everybody. They have a very different set of problems. And so as we think about helping all of our clients with transitions, it comes back to things like, first, what's your strategy? And the strategies of those two companies are going to be very different, but that everybody needs a strategy, everybody needs a commitment. The second is, in the case of the first, how do we help you accelerate your transition? In the case of the second, how do we help you build businesses like a hyperscaler would, say, in the technology space? And then part we didn't talk about is now let's go to the financial players. How do you actually think from an investor point of view to bring capital into this space? And if you're an existing financial institution, how do you change your business to actually accelerate net zero across? And those are some of the mix of issues that I want all of our colleagues working on as we engage our clients around the world.
And it's such a fascinating range of issues. And I think one of the things you've pointed out and is so clear is that it has to be tied to the company strategy, because what matters for an oil company and what matters for, McKinsey as its own business are very different. And I think where we see skepticism or pushback is when people are disconnected from their own. They sound sustainable, but it's not connected to their own strategy. It's sort of a nice little thing on the side. How do you avoid so the first is really, as you said, having a strategy and baking sustainability into that core strategy, whether it's scaling or transitioning or whatever it is. And then how do you also help your clients avoid the other side, which is sort of the empty promises, because it feels like there's a lot of that these days too.
The euphemistic greenwashing. I think it starts with, I think the world that we're in, there's no such thing anymore as a corporate strategy and a sustainability strategy. That the overall corporate strategy has to have sustainability woven into it. So, and that's maybe marker one, Sarah, is there an integrated strategy back to capital for the long term that balances And some of the interesting questions that then come when you start to think in a more integrated way are things like, is the transition commitment material enough? Let's cross-check that. Is it fast enough? Is it the remit of this generation's leadership, or are they pushing it to subsequent generations? How do you actually trade up back to your notion of time? And can you do it in a way that's economic and value creating? And here, I think we get to the real interesting crux of the question. And some of the exciting places that I don't think we've fully explored across any industry vertical are some questions around where are there synergies? And I might highlight two. There's a massive synergy that we're finding in upgrading existing technologies to make them more efficient through the use of analytics, the use of digitization, et cetera. By the way, those have a high correlation for carbon reduction. So are we thinking about the right ROI about investing in modernizing existing infrastructure that makes existing infrastructure more efficient and also less carbon intensive? That's kind of a win-win, but it comes with a mindset of, do I have the right risk-adjusted return associated with that? Equally, I think we're only at the cusp of, let's call it, price discovery for differentiated products that are greener. So as businesses transform, they will have new offers. We have something that is greener than what we had before. There's a hesitancy to discover price in this, and often a tendency to say, I'm just going to bear it fully as a cost. When in reality, there's real demand for a differentiated product from your potential customer. And so I think we're right at the cusp of a whole wave of price discovery for what's the premium for green on this. And our early indications are it's at least 15 to 20% at any step of any value chain, and it might be higher in certain aspects. Well, that allows you to fund and accelerate and change the logic of how fast back to time, in your transition. But those are questions that aren't climate strategies. Those are company strategy questions. And I think that may be the departure point of how to actually ensure this is real and it's not greenwashing.
Yeah, and back to your positive externalities, it's sort of how do you price some of that in, recapture some of that. And if you go to the grocery store, organic apples cost more than non-organic apples, and it's exactly what you're talking about. So
well, and the question may be, and you go back. I remember this vividly. I was having a chat with one of my dear friends who now runs one of the largest grocers in the US, and the thinking in the late 80s was there wouldn't be enough premium on organic products. People wouldn't pay a premium, and so there was a very slow rate of adoption across core grocery in the US around organic, until some players who were more focused and segmented just said, we're going for it. And all of a sudden you saw the price premium associated. Well, is the next wave of this not organic or building on organic, carbon neutral, carbon free? So that apple, do you now want to know how much carbon was actually emitted getting it to you? Does that become one of your, now current grocers are saying, oh, nobody's going to pay for a carbon free apple. I don't know. Or are we in the same spot as we were in the late 80s with organic on you wanting to buy carbon-free apples?
Mm-hmm. Mm-hmm. And does that somehow drive the cost down because you scale, to your point before?
Right. Exactly.
Right. Really interesting. Well, one of the things that I think is fascinating about McKinsey is you always have a crop of new young people. And so you have a window into what is Gen Z, I guess, or whatever it is right now, that, the kids coming out of college and business school are how they're thinking about this. And so if you think about, some of the conversations you have with the younger people, do you see a fundamental difference generationally in the interest in these subjects, or is that one of those myths that's out there that's really not the right way to cut it? Do you think that the young people who who work at McKinsey are much more likely than the older people to pay for the carbon-free apple, or to make very different trade-offs in their time to do something that's more sustainable. Do you see that in your business?
Look, I don't pretend to be an expert on different, particularly given we're in 70 countries around the world, demographical change. But I will tell you at least what I hear, from folks, and we get 1 million. We hire about 10,000 people a year, but we get 1 million applications, from people all over the world, and you learn a lot by listening to the folks who are applying. One thing I think that is clear, is the notion that purpose matters. Now, does it matter more now than? I don't know, but I know it matters right now. And I know it matters to the generation that is entering the workforce. And this notion of is what I'm doing both purposeful to myself, but also is the accumulation of the output, the impact of that work, purposeful in society? And when you push this definition of, well, what do you mean by purpose? You actually start to get to a much more holistic definition of impact that, back to our earlier conversation, starts to pull a lot of these what were externalities into the equation. Mm-hmm. And I do see almost a departing assumption that is the definition that I should be driving in my life. I need to consider these things, and some of them that spark in particular are a belief in the acceleration for climate change, a belief in inclusion. We haven't spent as much time yet talking about this, but the notion that inclusion is a core objective function pops very clearly from the folks who are applying to us today. And maybe a third would be, a belief, although this, needs to be managed carefully, so a belief in the power, the positive power that technology can actually unlock. And that, can you rethink everything in terms of method by thinking about the rapid evolution of technology to challenge everything from organizational models to, traditional hierarchies. And so those might be 2 or 3 themes, without, pretending to be an expert on this, Sarah, that at least that I hear from the folks who are applying to us.
Yeah, that makes a lot of sense. And obviously we've all had a crash course in being on technology and doing something different in the last couple of years.
Absolutely.
So, yeah. So last question for you, that if the last few years have been uncertain, to say the least. So going back to the CEOs, what do you think as we come into this still fairly new year? What are you hearing from the CEO suite as to their biggest concerns? Is it COVID related? Are we moving forward from that? What are the trends that you think that your people and the key leaders are really needing to stay on top of?
I try and get to a couple CEOs every day, just as part of my normal routine. Maybe one selfishly because it just gives me a lot of energy. But 2 is, I think it is an enormously powerful way to have a bit of a barometer on where leadership mindset is, at least private sector leadership mindset. And one of the questions that I asked in a just fairly simple way is, look, as you look into 2022 and you were to take a couple choices, are you into a lean forward mindset, a neutral mindset, or a bit of a pause mindset? And overwhelming across industry sectors and across geographies, I hear the lean forward mindset. I'm in a lean forward mindset. We have a moment, right? And the moment could be driven by the convergence of all these forces. The moment could be driven by very solid fundamentals across most corporate balance sheets. The moment could be driven by uncertainty and how to take advantage of uncertainty. And what gets underneath that moment is an obligation that the leader feels that this is a year for leadership. And I come back to that notion of how to be courageous in terms of charting a multi-year course. This seems to be one of the big obsessions on the minds of CEOs that I talk to. How to be a courageous leader as I enter 2022. One thought. The corollary, though, is something that I am a big believer in, and I actually think there's some interesting findings in the new research that you'll publish, which is a belief that resilience was undervalued, and the last couple of years exposed that. Not resilience in any one dimension. Could be supply chain resilience, could be talent resilience, could be technology resilience, financial resilience, but that most CEOs that I talk to say, look, we probably pushed to the efficiency frontier a bit too far and undervalued resilience. And so how do I now think through making my organization more resilient as I lean forward with courageous leadership? That might be the second notion of maybe 2022 is also a year for resilience. And then the last one that is on the minds of everybody that I talk to, and this could come from the angle of, I just can't get enough people, to talents moving in droves, to I learned how to move faster during COVID, to the org models are still stuck in a 1970s model of matrix, is this notion of organization. What's the organization of the future that enables this courageous leadership, that enables resilience, that enables speed? I haven't seen a CEO yet that is completely satisfied with the way they're organized. And so maybe that's the third leg in that stool. We think about courageous leadership, we think about resilience, and we think about the future of the organization. Those might be, a couple themes that I think are on most folks' minds.
Well, that's quite a to-do list. I think my mind is already thinking through what we can do at FCLT to be
a lot.
To be more courageous and to be more resilient and to really think about the future of our organization. So you've given me a lot to think about already, and I really appreciate your time today. I appreciate McKinsey's support for the ideals of being long-term and sustainable, and focusing capital in the long term to support a sustainable and prosperous economy. And I'm so pleased that you will be part of our board going forward, and hopefully I will get a chance to ask you many more questions. So thank you.
Well, and Sarah, I'd be remiss if I didn't turn it back around and just say thank you. I really see the power of FCLT as a catalyst. And I think it starts with interesting insight and great seminal research, but I think even more powerfully, you bring multiple stakeholders together, and that drives mindset change. And so I'm grateful just that we're a part of it, and we're committed for the long term. So you can count on us.
That's great. That's great. Okay. Well, thank you again. Thanks for listening to today's episode of Going Long with FCLT Global. To learn more, visit our website at fcltglobal.org.